Hello, this is Ahura from Audit Markets. We'll be with you with the short outlook on global economic outlook in the week ahead, which is going to be the 25th week of the 2024. As always, before going to the week ahead, we can check first the last week and see what we had at the last week, and then we can review the week ahead. The last week we started from Japan on Monday. The GDP in Japan was a little bit better than estimated by 1.8% contracting, which is, yeah, this is a lot better than 2% contracting, but still it's a negative. That's why the central bank in Japan also, which they had when they had a meeting at the last day of the previous week on Friday, they didn't change interest rate at 0.1%, but they told that in the next meeting before July meeting, they will meet with the business, with the market participant to see how they can how they can make a plan for the bond purchasing program. They probably will reduce the bond purchasing program to make a little bit more hawkish policies or contracting, or we can say accommodative policy to help the economy to get out from the situation. At the same time, they overcome from the inflation, which is increasing at the moment. Then on Tuesday last week, the most important news was from the UK. The labor data showed that the United Kingdom unemployment rate increased to 4.4% from 4.3% previous week. On the average earnings, it was steady at 5.9%, which is with including bonuses. Without bonuses, excluding bonuses also at 6.1%. Average earnings didn't change. Overall, data shows that the labor market data is weak in United Kingdom. Other data also we had from United Kingdom, such as industrial production and the GDP, they were also missed the expectations as estimate, generally signaling that the UK economy is not as positive and fine as it was predicted like 2 weeks ago, not before. Just because 2 weeks ago with the data we had, somehow the market pricing, we had some kind of after the PMI numbers, we were a little bit optimistic about the numbers from the UK, but these data showed that no, we should not be optimistic, and we should have to wait for more weaker number from the UK, and economy is close to be in a crisis again, to get back to the crisis and negative GDP for the second quarter as well. Out of the United States, we had the inflation numbers in China as well. Chinese inflation again at the under zero with the 0.1 negative 0.1% minus 0.1% inflation in May showed that the Chinese policies to encourage the people to get more buying and to buy the houses, to get out and spend the money, it was not successful. And the people in China, they do not have any interest in spending money, so the inflation is still negative, which is not a good news for Chinese economy. For this week, the Chinese central bank will have a meeting, and we have to see what they're going to do. Later last week, we had inflation numbers from some of European countries, especially from the Germany, which showed again that inflation from 2.2% increased to 2.4%, which means if this week's inflation from the Europe also increased, then the central bank in the next meeting can hold its rates and not continue the rate cost that they started the previous month. Last week from the United States, we had inflation numbers on Friday, the same day that we had the FMC statement as well. First, we had inflation numbers showed that the inflation fell much more than market estimates, and it pressured the US dollar, helped the stock market to increase. But later, in a few hours, when we had a statement from the central bank in the United States, it showed that that policymakers in the US, they expect more. They expect a higher inflation for the 2004 and 2005, and they're just expecting to reach the 2% central bank target at 2026, not before that. So 2024 and 2025 inflation will be they increase their estimates. So again, which means the market participants understood from that. They understood that the central bank policymakers, when they saw the numbers, the falling numbers in May, they couldn't trust these numbers and they need more evidence. So they do think right now that the maximum will have 1 or 2 rate cuts this week, which is hawkish kind of the statement from this central bank meeting. And that helped the US dollar to re-increase all its losses and even to print a new weekly records on Wednesday and then Thursday, and continued the same uptrend on a Friday as well. Last week, these numbers, they were the most important data numbers that we had. For the week ahead, we have a various central banks meetings. Let's start with the central banks meetings first. Or we can go with the Chinese data, and then because the China also will have a policy, this Chinese central bank also will have interest rate decision and policy decisions. On Monday, the Chinese data we will have the industrial production and fixed asset investment. Both of them, we are expecting to see the weaker data. Industrial production on May supposed to fall to 6% annually from 6.7% in April, and the fixed income, fixed investments or fixed asset investments supposed to remain unchanged at 4.2%. Later from the China, we will have the Chinese central bank meeting on Thursday, where we expect the Chinese central bank to hold the rates. But the thing is that at 3.4%, 3.45% for the prime rates. That's what we expect. But at the same time, the Chinese central bank, they should think about what they are going to do, because the lower the negative inflation that they have right now and the weaker than expected industrial production, they need more support and more help. So on Thursday, while we're expecting to see no change in the central bank interest rate decisions, but probably we'll have some changes in the policies and some more kind of the help and the support idea from the central bank in China to support the clients, to support the consumers to get out from the house and spend money. On Thursday, we will have also the central bank meeting in the UK, where we are expecting to see the interest rate to stay unchanged at 5.25%. This is market estimate. We know the inflation in the UK fell a little bit, but at the same time, GDP, industrial production, and labor market, all of them, they missed this expectation. So they need support, which means there are somehow probably, with these data, while the inflation is still so higher than markets, the central bank target, we can't expect the central bank in the UK to cut the rates, but with this data, we can expect that after this meeting, in the press conference, in the statement, or even at the central bank's policy, the central bank's speakers in the next days, they will start to show some signs of the probably rate cut from the July or even September and August, actually from the August, and this more signal from the cutting the rate in the near future, which can help somehow the stock markets in the UK. Otherwise, if we don't see these signs, so the more pressure we can expect from this on UK stock market, and probably the British pound should get some support, which is not the good news for the UK economy. Out of the United Kingdom, we will have interest rate decision in the Swiss National Bank as well, which is supposed to hold the rates at 1.5% after 25% rate cut, which was surprising rate cut last meeting. Also, we will have a central bank meeting in Brazil. Brazil also cut the rates last week with 25 basis points. But in this meeting, we expect they hold the current rates unchanged at 10.50%. Wait for more evidence to see what's going on in inflation and the general economic growth. Then also, if we put put aside from the central bank meetings, we will have the inflation numbers from the Eurozone as well, or PMI numbers, PMI data. We are waiting for inflation numbers from Eurozone as well, probably this week. Let me check. Yep, inflation numbers. Eurozone inflation numbers on Tuesday supposed to show that the increasing numbers from 2.7% to 2.9% for core inflation, and headline inflation supposed to increase to 2.6% from 2.4% that we had a previous meeting. Generally, the data shows probably with these data, market participants will expect central bank in Eurozone to stop the rate cut, to pause its rate cut policies, which started from the previous meeting. We know that the previous meeting, ECB, they cut the rate by 25 basis points, and market was expecting to see more rate cut in 2024, but with increasing inflation and with these numbers that we expect to see, and also the increasing inflation in France, increasing inflation in Germany, increasing inflation again in overall Eurozone, most probably the central bank will hold its current rate for the next meeting, and we will not see the rate cut in the next meeting, which means somehow a little bit support from the Australia for Eurozone euro, somehow a little bit support from euro, but Eurozone stock market can get some pressure after higher inflation, which is expected to see in the market on Tuesday. In United States, we will have retail sales, industrial production, and housing data. All of them, they are expecting to show some more weakness sign from economy, and to bring the idea that the central bank can support the stock markets and can support the economy with more rate cut. But at the same time, we will have more speeches from the central bank in United States. Most of the central bank policy makers will have a speech this week, and market participants, more than that, they will focus and they will follow on these speeches and information that we can get from the central bank policy makers during the week ahead. That's the whole information we needed to know. And if you go and check the charts, also last week we had let me say that also, I will show you on the chart and talk about that. Last week we had the monthly reports of the let's open the oil chart. This oil chart. Last week we had the monthly OPEC monthly report, EIA monthly report, and IEA monthly report. All of them, they confirmed that supply during the summertime will not be enough. So, which means that while we need more oil and more energy and more gas and more fuel during the summer, the supply will not as much as expected. So, which means a little bit the oil price can increase during the summertime, and then for the winter we will see later. But right now, price is expected to increase about $80 for now. So with these data, with these estimates, we can expect the oil price to increase during this week. For the US dollar chart, if we go to the US dollar chart, we can see that it still, so from the technical point of view, it's again back to the clear uptrend. With these data, we cannot expect the US dollar to increase much faster than this. It can be capped at 106.50 point, but these data also be supported from the United States safe haven demand, United States dollar safe haven demand, which means that as long as it's above 104 mark, we can expect the US dollar to stay unchanged around 105 mark, a little bit more or a little bit less. But for now, the US dollar can stay stronger. On the stock markets directly will react to where is my S&P 500? Stock market clearly will react to the Fed speakers this week, but generally right now we don't have that much evidence to see that the stock market can increase. Whatever increases will shock me. I don't expect more increase from the stock market in the United States. But from the technical point of view, if you look at the chart, 5,280 is the first support right now, and as long as it's S&P 500 trading above this level, we can expect the bulls to continue their way. This overall market condition and the data that we are expecting for the next week. If you had any other question, please don't forget to write down under this video on Instagram or YouTube. I'll try to get back to you as soon as possible. Have a good week. Bye.